Hi there, welcome to Grain TV. It's Wednesday, February 17th, and we had a rare event in grains with 2 days in a row of positive gains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn up 4.5, closing at the high of the day at 367.25. Beans 882.5, up 3.5, and wheat in Chicago gaining 5. News today in grains was pretty light because there was no EIA numbers because of the holiday on Monday, so we'll get ethanol numbers tomorrow and export sales on Friday. But the weather in South America continues to be a topic of conversation. On the one hand, widespread rains are giving the tail end of the crop a really good moisture potential, and so yield outlook in that part of the country is very favorable. On the other hand, the rains are also delaying harvest and causing a backup at ports in Brazil, so that is helping strengthen front month soybeans in the U.S., where March gained on more deferred May and July contracts. So we're sort of expecting to see a pickup in export sales to the U.S. at a time of the year when we wouldn't because of these port delays in Brazil. But again, this is probably a very short-lived phenomenon because their crop, both for corn and beans, should be record large. On the other news today, we had some more short covering in grains, I think especially in corn, where we saw really good strength going into the close with a 4-cent gain. It is still a market that is not going to run away from us, but at least we have had pretty much 3 days in a row of fairly positive price direction in the upside. On the crude market, the market continues to watch developments between Iran and the what you might call the founding members of this production freeze. Saudi Arabia and Russia, along with Venezuela and Qatar, have said that they would be freezing their production at January levels if they can get other countries to participate, and namely Iran is in their radars, where ministers from those countries were visiting Iran today to talk about this potential. There was no real word on whether Iran would agree to this, other than they thought the idea of the other countries freezing their production was a great idea, but they didn't go out on a limb and say they too would freeze production. Let's take a look now at some of the fundamentals that have been changing in the last few weeks. And in particular, we've sort of hinted at this, but I want to focus on it today, and that is the decline in the US dollar. We have seen the dollar really lose a lot of value off of its highs back in December, when we were trading at a US dollar index of around 100.5. And here recently, at the end of last week, beginning of this week, we traded as low as 95.3. We bounced back in the last few days in response to the recovery in the stock market, but it is still a step in the right direction. A lower US dollar cheapens the value of our exports in international markets, and that is a favorable event for U.S. agriculture. And to drive that message home, let's take a look at Argentina and U.S. corn prices in a common measure. And what we have here is the orange line is the U.S. corn price, FOB, and the Argentinian corn price in purple. And what I want to point you out to is this period in December, when, first of all, the strength of our dollar was off the charts, just super high. Secondly, this was a point in time when the new President Marcy of Argentina eliminated export taxes on wheat and corn, and he let the Argentinian peso float, which led it to lower by a substantial margin against the dollar. All of those factors combined meant Argentina's corn price was severely discounted to the U.S. But thanks to the weakness in our dollar, you can see where we're at today. We've actually finally dropping below the Argentinian corn price. Now that may change as they start to harvest their crop, but at least in the short run, probably for the next month or so, we should continue to have a stronger competitive advantage than Argentina has had for the first part of the marketing year. We've seen that, I think, in the response to new export business in the last week. We've had flash sales announced by USDA totaling 500,000 metric tons. And so I consider that sort of a good sign that maybe we're turning the tide here and seeing our export program pick up. Let's switch gears and talk about soybeans. Yesterday on Grain TV, we mentioned that 875 mark where we left a gap 2 days ago on the open, and that continues to provide underlying support here. But we've traded higher on this 4-hour chart, and you can see today we managed to trade a lot higher than where we closed. We got up into the 885, 886 range, sort of testing that support, or I'm sorry, that resistance up there before we backed off and closed at 882. But I wouldn't be surprised with the short covering rally we're starting to see that there's going to be more momentum to the upside to get us through 885 and then take another shot at clearing that 890 mark that we left on the chart back in January. That's all we got on Grain TV. If you have any questions, give us a call, 877-472-4607. And as always, visit us online at grainhedge.com.